Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 15 free stocks, Moo is going to give you up to 15 free stocks. When you open the account and you put $100 in it, they're going to give you 5 free stocks. When you open the account, you put $1,000 in it, they're going to give you 15 free stocks. There's a link down in the description box of this video. Click on that Moo link. Open up your new Moo account today. Go get that free stock. Go get that free money. The Federal Reserve flipped the stock market yesterday. The Federal Reserve had their January 30 and 31st meeting. And in that meeting, the Fed talked about interest rates. Now they decided to keep interest rates steady, not increase interest rates at all. That was not what the market wanted to see or hear. So the NASDAQ fell by 2%. The S&P 500 index fell by 1.3%. And a lot of y'all may say, well, golly, man, why in the world did that happen? Well, because investors were not completely satisfied with the Fed's stance on when they would start reducing short-term interest rates. See, the market wanted the Fed to come out and say, March 2024, we're going to start reducing rates. And the Fed didn't say that. Matter of fact, the Fed chair basically said March is probably off the table because of inflation. They don't want to prematurely start bringing rates down and inflation go back up. So they want to keep rates higher for longer. Now that doesn't mean they won't reduce rates in March. It's just the Fed is saying, we're going to be cautious. We're going to pump the brakes. And we're going to wait on a little bit more data, but unlikely March will reduce. Still an outside chance, but unlikely. The market didn't like that. See, the thing you got to understand about investors, and I'm talking about institutional investors, they like clarity, they like certainty. And they thought they would get more clarity and more certainty around when interest rates would start being reduced. They didn't get that, not to their liking. So therefore, they started pulling their money out of the stock market. Stock market started selling off. That's why you got the NASDAQ drop by 2% and the S&P 500 dropped by 1.3% yesterday. Now, is that a bad thing? I don't think so. I think it's temporary. I think at some point, these investors will get back in the game. Now, for retail investors like you and I, that's not a bad thing that the S&P and the NASDAQ dropped a little bit. Remember, our goal is to be buying these assets at a discount and holding these assets till they trade at a premium. And we got a little bit of a discount day yesterday when things dropped. Now, I don't know how long that's going to last. It will probably rebound pretty quickly. But you'll see days like that, where the market will drop here and there, 1%, 2%. Stay focused and keep doing the things you need to do in order to build wealth. Don't allow a little bit of fluctuation in the stock market, a little red day, get in the way of your wealth building process. You got to keep building wealth, guys, if we're going to get to where we need to be in order to make the kind of money we need to make in order to build our wealth and get to our pot of gold at the end of the rainbow. You got to stay firm and keep investing. Don't abandon your investment strategy. Don't abandon the wealth transfer blueprint. Yesterday, we saw the stock market fall a little bit. A lot of people were panicked. A lot of retail investors were panicked. Don't panic. We're okay. The Fed will be reducing short-term interest rates in 2024. If they don't reduce in March, they will reduce in May. That's my opinion. Now, I don't have a crystal ball. But what I'm telling you is, don't worry about the noise. Don't worry about the propaganda machine, which is the mainstream media. You do not abandon your wealth transfer blueprint. You keep taking a certain amount of money every single week, every single month, and start putting that money into assets that will grow over time and build wealth for you so that you can have a pot of gold at the end of the rainbow. What you do not want to happen is you panic, take all your money out, sit it on the sideline, and you miss all the valuable days that are coming where the stock market is going to boom or rally. You don't want to miss those days, guys, because those days you can't get back. That's where the wealth is built. So that's why you got to be in the market instead of trying to time the market. I'm going to continue to invest every single month into my favorite ETFs, into my favorite index funds, and to my favorite individual stocks. I recommend you do the same. I'm telling you, 2024 is going to be a great year for paper assets. The Fed will start reducing these rates. Yesterday, like I said, small setback in the stock market because institutional investors weren't happy with the clarity and the direction the Fed chair gave when he had his comments. They wanted him to basically come out and say, hey, we're lowering in March. Hey, we're lowering in May. He didn't say that, but he did say we are expected to lower rates 3 times in 2024. But they want to know absolutely when he's going to do it. And he didn't give them that information. So they didn't like it, so they sold off. That's it, guys. Don't read anything else into it. As I've already told you, what you got to do is keep investing. Stay on your wealth transfer blueprint, right? Don't listen to the noise. Don't listen to the propaganda machine. Don't listen to a bunch of guys on YouTube. You just stick to your wealth transfer blueprint. You don't want to miss any of these days in the stock market that could rally. We're not going to get very many this year. We may get 10 to 15 days that are really going to explode, right? Now, last year, the end of 2023, we had a 9-week run. I don't believe we'll have a 9-week run like that. What I think we'll have are days. You can't miss those rally days. You got to be in the market and invested in order to take advantage of them. So don't try to time the market. Get yourself in the market. Like I said, if you don't have a brokerage account and you're looking for one, go down to the description box, click on that Moo link, open up that new Moo account today. They're going to give you up to 15 free stocks. Go ahead and open up the brokerage account. Get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.